Hi, this is David Marsh. Here's another no zone we're in right now. We're looking to take the first NSC at a no zone. So what I'm going to do is I'm going to do this one a little bit different. I'm going to take one contract on each and 8 tick stop loss for both of them. I got to do this quick here. We're getting ready to fire off a trade here. Let me get ready. 67 and a quarter is my worst case fill if we get the NSC. This is a no NSC at a no zone. This is a higher probability trade. Let's see, there we go. Let's jump in at 67 and a quarter. Now we're looking, I'm going in limit. I don't want it up here, so I may not be filled on the trade. So if it takes off and starts hitting target and I'm not filled, I would cancel the trade because technically the trade is over. It's already made its money. I also have a 3-bar rule. If this bar closes and I'm not filled, I will cancel the position. Or I'm sorry, I will cancel the order. So we may not get filled on this one, unfortunately. But it's important that you get your fills limit and you get them at your price. I don't want to go in market and I probably would have been filled at 67.75. There we go, we got it. Okay. I want to go in at my worst case scenario fill and then take it from there. I don't want to go out even though it's a higher probability trade, I want it at my price or better. I don't want to go out. That's why I don't use market orders. So we're going to see what we can do here. See if we can grab 4 ticks off one contract and then see if we can make a little more. I could take this down if I wanted to. I could just go for 6 ticks on both, or I could just go for 4 ticks on both, whatever I wanted to do. But we'll see if this one wants to stretch out a little bit, see if we can make 2 points. But in any case, once we see 4 ticks of positive price action, I want to take my stop loss up to entry to protect myself. So, and this is always a double-edged sword when you start scaling out because you may see 68.75 and you think, well, I could have had them both off there and I end up breaking even on one or something like that. But it's kind of the way trading is. But it's what you do. It's all about following the rules. On a higher probability trade, if there's more out there to be made, I want to make it. Now, a lot of students that trade multiple contracts will use 3 scales. They may do 4 ticks, 8 ticks, and 12 ticks, and keep almost run like a manual trailing stop. After 4 ticks, move it up to break even or entry, and after a point, maybe take it up 1 or 2 ticks. After 2 points, move it up a little bit more, and hopefully she'll run all the way up and hit all 3 targets. Sometimes it will, sometimes it won't, but that's kind of how it is. Just like we discussed in the last video, this is a EET short that would be avoided, even though it's showing on the screen. It's avoided EET because this normal system entry, EET is early entry technique, this is a high probability trade. That means we expect this market to move up. So you don't want to take a short trade if you expect the market to go up. Stop loss on the EET would be 68. In an earlier video, we took a no zone trade. We showed you the EET. The rule said stay away from it. The rules helped us. It kept us from a losing trade. And we got into the winning NSC at a no zone. So hopefully we'll see the market move up and make a profit on the trade. So let me pause the video for a bit and we'll come back when the market starts moving around. I will say though, if this trade goes against me, I mentioned earlier we have a reversal signal, otherwise known as a chop signal, and that's not necessarily an NSE short. It's different parameters have to be met for it to be a reversal or chop signal. I would reverse and try to recover what I lost off of this trade if that did happen. So let's see what this does. Looks like it's starting to get some movement here. So the EET just stopped out. Yeah, EET that we avoided stopped out. We're at our first price target. Let's take our stop loss up. Now we have not been filled yet, but it touched. So as long as it prints up there, I need to take my loss up. Okay, I need to take my stop loss up to even. Now here's where this is the double-edged sword. You think, well, I could have let them both off. I may get stopped out on the other one. That's okay. That's okay because there's going to be plenty of good trades that are going to run up. And now another thing worth mentioning is that if my long-term filter were to go long, and it's relatively close, but not close enough that I could do anything with, but if it were to go long, I could take this up even higher and try to run off the fact that the long-term filter just switched long, so we'll see some more upside movement. So I could also, maybe take this up a tick or two now. Say, well, okay, it's moving up. I want to lock something in now. I'd like to get the full 8 ticks, but I also would hate to see a 6-tick winner to turn into a break even. So we're going to get stopped out. So we made 2 ticks profit on that. And sometimes that's going to happen. Okay? If I'd have kept it at entry, well, we would still be in a trade, and that's where it gets bittersweet. When you see this now, if this were to take all the way off, you say, well, if I didn't move my stop loss, if I kept it at entry, I could have still been in that trade. Okay, well, that's part of trading. You have to have a trading plan, and you have to follow the plan. Sure enough, here it is. We're heading back up. I could have left my stop loss at break even, and I'd still be in the position. Okay, but that's okay. I still made 2 ticks. I made a half a point on one contract. I made a point on one contract, and sure enough, here we are, just about broaching the full 2 points. And hey, it is what it is. My long-term indicator is going along. It's very close. So if I wanted to re-enter a trade, I could simply enter a pullback. I could enter here at 67.50, and if it does come back down, I could just get right back into the position, at least in the direction of the market, and move it. And if the long-term indicator goes long, that's exactly what I would do. But I think you get the gist of the taking NSEs out of no zone. You've got a couple ways you can do it. You can have multiple targets if you want. You can move your stop loss to break even and start moving it up as price moves up. And again, that's a double-edged sword, because if you keep your stop loss too tight, you get stopped out a lot, kind of like I did. But if you get a nice movement, some strong action, it could break right through, and then you make your profit. So, and even still, we have not hit our 2-point profit. This could still come back down here and break even on a trade had we not jumped out there with the 2-tick profit. So I think you get it. That's just some of the things that I teach, some of the things that I like to show you. And again, this is June 25th. I like to show you current data, current action. So we'll go ahead and wrap it up. That was we had a one and done no zone trade today. This is the second no zone trade today, and it was a winner. So 2 nice no zone winners, and that's it. Thanks for watching.